afternoon or good evening, depending on where in the world you are joining us from today. Welcome to the Golden Turtle Social Club webinar Q&A featuring our special guest, Chris Vermeulen, whom I'll introduce shortly. This is our second online event following the success of our inaugural event with legendary contrarian investor Doug Casey, which was a lot of fun. It gives us great pleasure to welcome you back. My name is Mark Yaxley. I'm the CEO of SWP. Joining me this evening is my colleague, Dave Lawson. Dave, I don't know if you can stick your hand up or say hello.
Hello, everybody.
Dave is a senior member of our sales team located in the Cayman Islands. Dave will be hosting this evening's webinar, engaging and posing questions to Chris that we've received from you, the audience. Prior to introducing Chris, let me just cover a few quick housekeeping items. All participants, excluding Chris, Dave, and myself, will be on mute during the webinar to reduce background noise and possible interruptions. But you can, of course, ask questions. That's the whole point, by using the chat function in the Zoom menu. We will be passing along your questions to Chris throughout the event and or answering them directly in the chat if they're specific to SWP's products and services. So feel free to ask away. There are no boundaries on this evening's call. I might come to regret that comment later on. Lastly, the webinar will be recorded and posted to YouTube. So if you have to leave early or you want to rewatch it later or you want to share it with all your friends and family, which we hope you do, you'll be able to do that as well. Without further ado, it gives me great pleasure to introduce tonight's invited guest, someone that I admire for his depth of knowledge and his constant professionalism, someone that I've gotten to know over the last decade, Mr. Chris Vermeulen. Chris has spent more than 25 years as a technical analyst, equities trader, investment strategist, thought leader, educator, and entrepreneur. He's done a lot of things in his relative short life. His extensive trading and investment background comes from devoting his life to studying the financial markets. It's true, he's been doing this since the age of 16. It's pretty impressive. Having traded and invested through multiple bull and bear cycles, Chris understands the importance of capital preservation, i.e., he's a bit of a gold bug himself. He is also the author of several books, including Asset Revesting, which I personally read and highly recommend. I'll put the name of that book in the chat in just a second. He has been a guest on numerous financial websites and stations, including Sprott Money, Yahoo Finance, Kitco, and many more. Chris has also been a steadfast contributor to SWP's newsletter and podcast for nearly a decade. Chris, I can't believe it's been that long. And so we thank him greatly for that. Chris, welcome to the Golden Turtle Social Club Q&A.
Yeah, thanks, Mark and Dave. Appreciate it. Yeah, glad to be here.
Great. At this point, I will pass the mic over to you, Dave. Get us started.
All right. Perfect. Thanks, Mark. And I'll echo your statement in thanking Chris for joining us tonight. I personally am a fan. I love watching you work, and I know a lot of our clients do as well. So we've received a number of great questions tonight. As Mark said, if things come up during the webinar, please put them in the chat, and we'll do our best to answer as we go along. But before we get started on the questions, Chris, I do believe that you have a little demonstration you'd like to share with us with some technical analysis. So I'll turn it over to you.
Sure. Yeah. Appreciate it. So I was thinking I'd give a quick overview of the markets. Now I'm a technical trader, which means I focus on price action. And so I don't get into news. I don't get into policies. I don't really worry about what the Fed is going to do, because what I follow, the real indication of which way price is going, is to actually follow price itself. And so what I do is I look at the charts, the money flows, cycles and things like that, which I'm going to show you. And then we can identify, which assets are strong, how different assets are moving, how they relate to each other. So I'm going to share my screen and show you guys a little bit of how I view the markets and how the markets kind of unfold over time here. And once you see this technical side of the markets, if you're not a technical analyst, this might crack your brain open and you might actually see a whole new way to view the markets. If not, hopefully you'll pick up something on this because there's some very interesting things unfolding right now, which is big for gold and silver and the equities markets and all kinds of other things on top of that. So just a really quick disclaimer here. I am not a registered financial advisor, so this is for educational and informational purposes only. So eventually we've hopefully, we've all been through probably a bear market of some sort, and eventually another one of these is going to come around. It's going to happen in the precious metal space. It's going to happen in the equities and real estate, all of that stuff. The big thing is you need to be able to identify when one is starting. You also need to identify when one is coming to an end and when you want to get into the markets and take advantage of the price going up in value. And so there's a few really simple ways, a high level view of how I look at the markets. And I want to cover how we go about doing this because once you have this feel or this vision or view of the market, everything really changes in my opinion. And it comes down to market structure. Now, I live on the water. I'm a boater. I'm a sailor, kiteboarder, all of that stuff. I'm a surfer. And so I like to look at the stock market, and not just the stock market, but this is the same with gold and silver, precious metals, pretty much any asset class. But look at the stock market as the ocean tide. When the tide goes up, it lifts all boats. When the tide goes down, all boats go down. And so that, if we were to look at the stock market itself, we want to know, are we in a bullish environment? Now, this is the SP 500. This is the weekly chart going back to 2020, the COVID low here. And so if you look at the stock market or whatever asset it is, are we in a bullish long-term rising tide environment, or are we in a declining falling tide? Now, if you're in a rising tide, you obviously want to own that asset class, which are equities in this case. If it's falling, you don't want to be. You might want to be somewhere else. You might want to be in gold. You might want to be in the US dollar rallied 18% in 2022 while the stock market fell. So you want to move away from a tide that's going down and into a rising tide. And right now we are back into a rising tide environment. So that's the big view, bull market or bear market. If we were to zoom into a smaller time frame, like the daily chart of the SP 500, the stock market has these wave-like patterns that happen over and over again. And think of yourself walking down a beach with an ocean there, and you see surfers out floating past the break. They're sitting on their boards waiting. What are they waiting for? They're waiting for a set of waves to roll in. And the stock market has a set of waves that roll through. Usually there's about 5 to 12 waves that roll through various assets, stocks, gold, silver, various assets like that. And we can identify those big waves coming. And when they're coming, we can position ourselves. The nice thing about identifying and hopping on these strong waves is we also know when they're starting to get weak and when we need to carve off before it swallows you and takes you down with it. And so in a rising tide environment, waves are usually stretched to the upside because the markets naturally always want to go higher. The pullbacks are short-lived and you go back into another rally phase. In a falling market environment, which I think we'll be coming into sooner than later, it's usually more abrupt and the waves are to the downside. And you want to make sure you take advantage of falling pricing and know that there's very limited upside potential when the market does rally. And so once you can identify these waves and find a way to navigate these, then the market kind of really becomes a great opportunity. It doesn't matter if the tide is going up or down, doesn't matter if the wave is up or down. You just have to find a strategy that will take advantage or an asset class to do that. And so thinking of the markets from that perspective, the tide up and down, and then playing the 5 to 12 waves that roll through various assets every year, we can look at it from just a very high level. This is based around Stan Weinstein. He wrote a book, How to Profit from Bull and Bear Markets. He breaks the stock market down into, I say stock market, I'm just going to reference everything to the stock market just because it's fairly straightforward, but these stages work across any asset class. Could be a currency, could be gold, whatever it is, even individual stocks. These stages happen for a day trader on a 1-minute chart. This stage could happen like 50 times a day. So all of these stages. So I'm just going to keep this reference to the stock market for now, and then we'll go into how all this is going to play into where we are in the stock market and what's going to happen, I think, with precious metals here going forward. So stage one is a difficult time. It's a sideways market. It's not a time that is easy money. A stage three is also a difficult time to make money. That's why they're orange and red. Markets are all over the place. In fact, we're in a stage three right now with the overall economy and the stock market. Where the big money is made is a stage two bull market, which we all love and what we all generally always want. But we can also make a fortune during a stage four decline, which is a financial crisis. This is the tech bubble in 2000. This is the financial crisis 2008, all the big crashes that happened way before that. COVID was a very quick stage four decline. 2022 was a small stage four decline, but these are huge opportunities to make money. And so this is how we want to look at the market, breaking it into stages. Different stages require different assets will come to life during different times in here. And when you identify all these different cycles, you're going to understand, does a current asset, is it currently trading at like peak maximum kind of risk? There's not a whole lot of upside left. Or is it near a cycle low, a stage one, and it's resetting, and you've got lots of upside potential over the next several years, depending on the time frame you're looking at. So just understanding the rising, falling tide, what stage a particular asset is in, allows you to know, do you have a lot of risk with not upside, or do you have very little risk with a lot of upside? And that is really important. And then through all that, when you understand how these markets work, and I'm going to show you kind of how we can identify where we are in some of these stages, you're going to go through this emotional roller coaster. And this is the roller coaster that almost everyone goes through who doesn't understand the markets. They don't understand the stages and cycles. Typically, when the market is going up, it starts to get into a bull market phase. People get optimistic. They start to believe in the trend. And then we're in a full-on bull market and there's thrill and everybody's making money. And then people get into euphoric phase, which was like late 2020 and early 2021. Everybody just piled into everything, thinking they're going to be rich. And then usually the market has a sharp pullback. And then we start to see the majority of stocks have been moving lower and trading down. It's just recently we've got the AI bubble that's dragged the indexes up. But if you look at most ETFs, like the ARK-K ETF, in fact, if I was to just pull up the ARK-K, which this is a aggressive ETF of small cap stocks, and I zoom out here, you can see this was the COVID crash. Everybody piled in. Now, this is a very aggressive sector. People piled in thinking they're going to make a fortune. And then it came into this consolidation phase, went into a stage four, and now it's in this next kind of base. And I don't even think this is a stage one. I actually believe we're going to see this break down and go even further. But this is an exact cycle that took place with almost everybody from the COVID low all the way to the peak. And if we look back at this chart, you can see this is the same type of thing, the big blow off move, the consolidation, stage four. So these cycles happen all the time. And if you hold a bunch of ARK shares and you're still holding, then you've experienced that dramatic emotional roller coaster, and it's not fun. Once you turn all this on your head and you understand how these markets work, as people start to get anxiety because it starts to break down and people can't believe the markets are rolling over, you'll actually become optimistic. You'll be like, hey, this might actually be the start of a stage four, and we can make money in a stage four. This is an opportunity. And then, of course, as people are in denial, people are losing money. They can't believe how much they've lost. They're like, I can't get out now because I'm down so much. I'm just going to hold on. We're already in belief we'll be having a strategy to benefit from this. As there's panic in the market and people can't take the pain anymore, saying if prices keep falling, I'm going to lose my retirement. I have to get out. This is typically where we see precious metals start to really come to life. They start to come to life right in this phase. And, we'll be taking advantage of it through different asset classes and precious metals. But you'll be able to ride this downward curve in a very exciting way. You have fun on the way up, you have fun on the way down. And really the last couple of years has really just been kind of a choppy in terms of the markets in general. So that's kind of how I like to look at the markets and the emotional roller coaster. If you're on the ride or you're enjoying the ride, like what side you're on. And then on top of it, there's two key cycles to look at here. The first cycle here is the stock market cycle. This is the blue cycle. And the key things to look at, and this is where we get into where precious metals and gold is telling us what's going on, is typically when gold and energy do well, like energy stocks, and we see industrial capital goods stocks do well, usually means we are right near a major stock market top. And the gold chart is a perfect barometer of this. So if we take a look and go way back here to 2001, 2002, gold started a new super cycle. And gold eventually started to rally up and it went into a multi-year pause back in 2005, 2006. And during that time when it paused, money was piling into the stock market. People didn't want boring gold. They wanted high growth stocks. They wanted real estate. And then after all that happened for a few years, suddenly gold came out of nowhere and we just saw gold start to make new highs and rally. And the way I see gold, guys, is I almost look at like Earth as like a beehive, like it's like a planet, it's a hive mentality. And so gold to me is the global fear of what's going on. When gold starts to take off, even if stocks are still going up, it's a major red flag. It means people are worried about a bubble in equities. They're worried about real estate bubbles. They're worried about currencies, war, all kinds of stuff. And of course, we have all of those things unfolding again. And you can see we have the same scenario. We started a new super cycle in 2019. Gold went dormant for a couple of years while the stock market and the housing market took off. And then just recently, in the last several months, gold and silver have just been on a tear to the upside. The US dollar has even been ripping higher as well, even with gold, which is a very bearish sign for the economy and the markets. And so this is a big red flag. This is telling us the whole world is now getting very nervous. They want to get out of the financial systems, get physical gold because they don't know how things are going to unfold. And typically, this indicates that we're going to go into it. This is the 2008 correction. Gold had a pretty big pullback. It pulled back about 34%. Silver pulled back about 65%. So we're getting into this phase here where we could see gold and silver become weak. I know it's not what everybody wants to hear, but we're coming into a time where we could actually see gold kind of stall out. 2750 was the target that this price action using some technical analysis, maybe we'll draw it on the charts later, told us several years ago 2750 was the ultimate target. And from there, some big pivot point in the market should change. And so we'll get back into gold later. But the other thing here to look at is people have been piling into energy stocks. Every time energy stocks have got highly valued, we've gone into the 2008 correction. We went into a really weak economic time over here. And then, of course, everybody right now is betting on energy stocks, expecting like $200 per barrel oil, and they're positioned in here. And so people are betting on war, and that is another warning sign in the markets. And last but not least, we look at businesses. This is the capital goods, industrial goods sector, and it has been on fire because everyone has had this COVID bubble with their businesses. Most business owners don't understand the cycles of the stock market, the economy, and how things unfold. And the reality is, after they have a very strong window of growth, they all start upgrading all of their equipment, assembly lines, fork trucks, warehousing stuff. And so all the industrial capital goods companies have got killer earnings. And so usually companies upgrade everything right at the end of an economic cycle. They think they're going to be strong forever and that they got this killer business, but they end up upgrading everything at the worst time, pay high interest rates, millions for the new assembly line, and then demand falls. And then we go into, layoffs and bankruptcies, and everything turns into a stage 4 financial crisis and kind of wipes things out. I'm not a doom and gloomer, but that is what things are starting to point to. So that's kind of where we are in a nutshell. And when we look at the SP 500, this is the weekly chart, and hasn't been quite updated for a few weeks here, but overall, this blue box is telling us that the underlying strength of the markets, of where money's flowing between various assets like utilities and gold and bonds and the US dollar, is telling us we have a very weak market right now. Very similar to what happened just before the 2022 pullback. And so we need to be aware that things are starting to break down from a technical standpoint. Even though Trump and Elon, they're like now it seems like team members here. They've sparked some energy in the stock market. They're pushing it higher. But overall, the economic cycle is much more powerful, I think, than what's happening. Eventually, once this buying wave of people moving in with a new president elected, that'll fizzle out and the economic cycle will come into play. And so if we take a look at this is the last little section here I want to talk to you guys about is this yellow cycle in the background. Now that's the economic cycle. And when we take a look at the economic data, I used to have an importing business. I used to have my own line of health products. I used to be big into manufacturing overseas and shipping and all that stuff. And when we look at this is a little bit outdated, but overall, when we look at the job revisions of jobs getting cut, manufacturing is like 1 to 2 quarters ahead of the economy. Businesses slow down, they don't put in their orders, and usually put orders in like a quarter or two before. And so factories, manufacturers are already laying off jobs. That's telling us there's going to be some weakness in the next like 4, 6 months or so. And we're starting to see that. Retail trade, we're starting to see layoffs there. Leisure and hospitality, a bunch of layoffs. People are starting to tighten their wallets. People aren't traveling quite as much. There's still lots of demand out there, but it's just not the same. And of course, businesses. I was just in Las Vegas with about 36 very, very successful entrepreneurs and businesses, and they're all saying the same thing. The market has completely changed. Wallets are closing and tightening. Businesses is slowing, and everybody is cutting they're cutting all their expenses for their businesses. And so all these professional services are laying off people because businesses are trying to tighten up and do all that. And with this happening, we start to see unemployment start to rise. These red lines here is when the unemployment crosses the 24-month moving average. And every time we've crossed it, we've gone into some type of financial reset and some type of financial crisis. And so we've seen that. So now we're just waiting for the music to come to an end. If we take a look at depleted excess savings in the United States, so this is just before COVID, there was a lot of savings, and now we've fallen down. People have burnt through their savings, and inflation is huge. And now that they've burnt through their savings, we're starting to see delinquencies come up in credit cards. If we look at credit cards, we have over 30% are maxed out credit cards, and they're completely maxed out. And so that's the first place people start to default. They don't default on their mortgages first; they default on their credit cards. And we're seeing the largest number of maxed out credit cards. Usually, credit cards default, but people don't generally max them out and then default. They just like, I can't afford what's on there. But people are maxing them out and then defaulting on them. And then on top of that, we're starting to see delinquencies in commercial real estate, which has already been on fire for a while, starting to skyrocket. And we're seeing residential defaulting as well. And then just to take it one notch further here, if we look at the cost to buy a house, this is going way back to the early 70s, 60s, how the cost of a house, it has just skyrocketed. It is nosebleed territory. Most people can't afford a new house, young individuals. It's too expensive. We're seeing housing start to roll over. This is housing starts. I know this is a lot for people to process. This is really high level, guys. You don't need to totally understand what I'm talking about, but home starts are slowing just like they did a year or so before the housing collapse in 2008. We're seeing the same thing now because people can't afford them. And right now we are seeing, in terms of existing home sales, they're just very dormant. There aren't really any sales going on. In my town, there was about 60 to 80 homes for sale like 2 years ago, and it was impossible to get a house. It was a bidding war. Houses were sold. And now there's 600 homes in my town for sale, which is unbelievable. And the crazy part is nothing is selling. And if we look at the price of homes, everybody still wants to get this top dollar, but nobody wants to lower their price. And because they're all wanting to top dollar for the house, they're not selling. And so the only way we're going to start to see home sales pick up is when the price starts to fall and people start to be like, I need to get out of this house. And we're going to see the housing market unwind. And it's going to be kind of the start of a painful process. So there's this huge technical wave going through the markets in terms of where money's starting to flow between different asset classes. Gold is a big warning sign. The real estate, the defaults are picking up. Real estate has topped. It's on the verge of a very big breakdown. So that's kind of like how I look at the markets from a really high level. So I believe we're coming into chaos. I do think when we get into the questions here, I do think gold and silver are going to have some headwinds, which I think it's going to be the ultimate opportunity because I think we're going to see eventually gold and silver be an unbelievable buy. Hopefully, like 6, 8, 12 months from now, it will put in a major bottom and it will be one of those where, it rallies for 5, 6, 10 years and we see some massive numbers. And we'll also see gold miners take off. Gold miners will start their new major bull market phase, which we haven't seen really since like the beginning of 2009, when they had that multi-year rally. So that's kind of the view of how I see the markets and how things are unfolding. And so hopefully that gives a little some insight, guys, on kind of like how I see the markets and the economy unfolding and all of that.
Fantastic. Really appreciate that, Chris. I certainly learned a lot, and some of it hit close to home because I was holding my ARC since 2020, all the way up and all the way back down. So
Right.
certainly felt that one. So looking at your charts, it makes a lot of sense. We're in, I guess, what you describe as like a slack tide sort of situation. The tide has
Mhm.
gone up, and we're in between phases. I believe phase three before we enter the phase four. How long do you foresee us kind of staying in that middle zone before the tide starts going back out again?
Yeah, so that I mean it's really tough. Like I do feel like we're a few months away. I feel like the new election is going to suck money into the equities market. It's going to create some excitement. Like we saw a big rally with stocks when Trump got in, and of course, money moved out of the boring kind of defensive plays, which is like gold and bonds. Everybody pulled money out of those and dumped it into the stock market. But once this feeding frenzy, I think, ends, which I have a feeling we could see this market want to rally into the end of the year. Maybe not a strong rally, but continue to drift sideways and higher. Seasonality wise, this is the strongest time of the year for equities. And so if equities are doing well, we're naturally going to see probably gold underperform a little bit. If gold does take the lead and continue to push higher and the stock market actually stalls out, that'll be a big red flag that, we're only, I think, a couple months away from a major market top taking place. So um, I think this is a major turning year for a lot of assets, and there'll be a bit of a financial reset come next year. And next year, I think is going to be very volatile, very, very volatile to the downside for a lot of assets. And it's going to be a screaming opportunity if you see what's unfolding. We believe it or not, everybody should actually probably want a big correction because it's going to be a new opportunity to reinvest and have the next run. We need a reset for the markets to have another, 3, 4, 5 year rally to the upside, especially in precious metals. It needs a pause now. If it keeps going straight up, typically what goes straight up comes straight back down because it's more of an event and it's not sustainable. We do need a rally and a pause and a rally and a pause. You want the charts to stair step their way up, not go parabolic and then is straight up and then come straight back down. So I think over the next 12 months is going to be an amazing opportunity. I think we'll see a lot of things correct. I think gold and silver will hold up fairly well. I think they'll do much better than in 2008. I think there's a much better scenario this time around. But overall, there will be some weakness, I think, through most of next year.
Thanks. So moving on, we'll start with the questions. As I mentioned, we do have a number to get through here. Now, a lot of these are going to be, perhaps related to politics, especially in light of the election this week. Understand the way that you look at the markets is not necessarily the news, but the charts. But we'll work our way through these questions and again, appreciate if people do have comments or thoughts, remember to put them in the chat as we go along. First question. Given the long-term forecast for gold and silver is expected to rise by many, what is your outlook for platinum and palladium? While I understand these metals are more industrial in nature, they also play a key role in modern technology.
Yeah, so I don't have the futures for those, but let's just take a look. There's an ETF here for platinum, and more or less, we just have to look at the overall picture of where this is going. So platinum has been out of favor for a while, and it is trying to carve out a very big base, a big stage one base. It has been trading sideways in a very noisy range. Now, this is the daily chart zoomed way back. I think eventually we're gonna see this do very well. Right now, I still think I think there's still more downside. I don't see it taking off because I do believe we're coming into a weaker economic window. So I think this is going to continue to kind of flatline and underperform. And this is the one thing about commodities is they can go dormant for like a decade. Like, people get excited about one space or one commodity and then it goes dormant. I mean, this one has really been it's since 2015, and here we are going into 2025. There's 10 years of something going sideways. So what I do that's a lot different. A lot of people want to pick a bottom. They're like, oh, I want to get it low. And maybe you did. Maybe you bought it way back here at the low in 2020 or 2016, but it's still at that same level. What I do that's a lot different than people is I wait for a new strong trend to emerge. I don't need to buy it at the low. I want to buy it when it's moving up because once I move in, I want it to keep going up and ride that stage two, that bull market phase. So that money that's being put to use is actually growing versus trying to nail the bottom and getting in, 5, 6, 8 years ago, and you're still waiting for that bottom. That's 6 years of missed out opportunity. So I think you're better to move to a different metal until this starts to come to life. I'd be much more inclined to buy it at 100 for, I know this isn't the price of the actual commodity itself, but if platinum was to rise up here to 120 with a strong chart pattern, I'd be more inclined to buy it there because I know it's probably going to, the next run is going to take us to probably 160 or 170 in a short window, and I can make a bunch of money. So it's not about trying to pick a low in precious metals specifically. It's more so where do you rotate your money in the metals to get into one that is moving up? I mean, gold to me is one of the best. I find it's the easiest to trade, the easiest to invest in. It's slow. People don't like it sometimes just because it's slow moving, but when something is slow and consistent, I mean, you can do very, very well with it. And you can put more money to work, right? You probably won't put nearly as much money into silver as you would with gold if you're a conservative investor, because silver is just volatile. Gold, though, is much slower moving beast. You can put more capital there and not sweat as much when the pressure goes against you. So I think it's good to wait for platinum before it changes. If we take a look at palladium here, palladium has gone through this full cycle as well. You can see it's gone the euphoric phase, very, very volatile topping phase. It has broken down and it's out of favor. It has a lot of work to do. Again, we're generally going to see all of these rally together, I think, in a big way once the financial cycle kind of cleanses itself. I think we could see palladium potentially coming down with maybe not as much used in the car space, electric vehicles, things like that. There's an interesting way to look at the markets actually, which there's this ETF called GLTR, and this actually holds gold, silver, platinum, and palladium. So this is the basket of them. And if you look at them, it gives you a really nice picture of what they're doing. Now, if you're not a technical trader, what's happening here is it's formed this giant. Obviously, gold and silver are doing all the heavy lifting because the other two metals are really struggling right now. But overall, this chart pattern, and it goes way back to 2012, is still pointing to a very strong rally in the metal space over the next like 5 or 6 years when you carry this forward. So I like the precious metals space. I think platinum and palladium will have their time. I think they're undervalued and they're just not wanted right now, which is a good thing. But I think we just need to wait for the right market environment, because if we get into a weak environment, they're going to be out of favor and get pulled down. So we really just need to give these some of these commodities a little bit more time and then get into them as they start to move higher.
Excellent. I know a mistake a lot of novice investors make, and like you said there, is always trying to time the bottom and the top. But judging by what you said, it's better to wait till you see the trend shift, miss the bottom. You're not trying to maximize in that sense, but wait till it actually starts to move in the new direction.
Yeah, it's funny because if you take a loss, a lot of people don't want to get out of a trade if they take a loss, and then they'll hold on to like a gold miner for like 10 years and it never ever comes back, really, a lot of them. But the thing is, there's two types of drawdowns. When you get into an investment and then it draws down, it goes down in value. That really sucks. Nobody likes losing money. But the thing is, we can always make money back. The thing that we can't get back, the most costly thing, is time. And you just nailed it, Dave. It's like instead of trying to pick a bottom and then having 8 years of no return, why don't you just wait for it to bottom and start a bull market and crystal clear be in a strong uptrend and then put your money in it and watch it keep going. And during those 8 years, while it's still basing and trying to find a bottom, you go put your money somewhere else. So you're making money consistently. And that's my whole focus is where can we put our money right now so that we can make money? And when that asset stops wanting to move up, where's the next spot we put it? So the money is always in something going up. Even if it's in cash, it's still earning 4.5% interest. We always want it to be going in something going up. And you don't want to pick a bottom because a bottom could take 10 years. And it's a huge waste of time. And none of us want to waste 10 years on one bet that might not move. You're better to just pay a higher price when it's moving. It's just like anything else. You pay for what you get. If you buy it at a higher price, you're buying it at, something that's trending up and that's moving, that's going to provide you with returns. So you're paying for that kind of performance in a way if you look at it from that kind of perspective.
Very nice. Move on to the next question. Our client is curious about potential shifts in the financial system in light of current government debt levels. Could we expect more bank collapses? And if so, how do you see silver comparing to gold in this context?
Yeah, I mean, I think we're probably going to see some serious bank problems. I mean, it wasn't that long ago. I swear the Fed and everybody, the bank systems were like, "Oh, we're stress test, we're all good," and then like Silicon Valley blows up like 3 days later. It's like, and they put all kinds of patches on banks to keep them going. So the financial system to me is super brittle and weak. It's not nearly as strong as they make us lead us to believe, which is why I think precious metals have such a strong story this time. We know the financials are really weak. I know, the government come in and print and bail everybody out, but that's actually, still good for metals. So there is a very strong case. I do think, like looking at financials, I do think eventually we're going to see a huge wave of defaults. We're going to see in the United States, there's so many private little banks. There'll be a ton that probably go bankrupt. Canada, there's like 5 or 6 of them. They're too big to fail, more or less. I don't see that happening, but in the States, there's a lot of little ones. And of course, we're already seeing the credit card delinquencies, which the banks hold most of those. We're already seeing commercial real estate are defaulting, and we're starting to see residential bank real estate defaulting, and the banks are going to hold those. And if the housing market drops 15-20% or more, um, those banks are going to be offside in a very big way, and it's going to cause a lot of bankruptcies, and it's going to be a very strong story for gold. Remember when like you couldn't get money out of the banks, like in Europe, they were like a €100 a day limit you could take out of machines. I think you got to be really worried about that. We had in Canada here, this was a couple of years ago now, we only have a couple big internet providers, and one of them went down. So like half of Canada was out of internet. And so I went from my house and I went in town to find a coffee shop because I do my morning report for investors. And I found a coffee shop on a different internet. And I'm sitting there, and then this fund manager comes in, and he knew me. I didn't know who he was, but he goes, "Hey, Chris, can I sit down and talk?" And so we started talking. And he comes to me and he goes, "You wouldn't believe it." He goes, "There's no internet anywhere, but the gas station let me fill my truck up. They took silver rounds to fill his truck up with gas." And it just goes to show, if the internet goes down, something gets hacked, currency or banks close, there is nothing better than having a stack of coins. I've got like, gold bills. I got these, gold things you can break off into like little chunks of 1 gram. I mean, I don't think you can go wrong having this stuff, and just having like, he keeps silver rounds in his glove compartment. He's like, I never knew if I was going to need them, but he's like, I needed them today. And it just goes to show, when the world stops, precious metals become the currency. Like in a digital world, it instantly goes from your phone not working to, hey, I'll give you this chunk of shiny metal, right? It's like, so going to I do believe there's going to be bank crisis. I think there's currency problems, all kinds of stuff. The Fed and the government always has a way to jimmy rig the system, but having physical gold and silver is by far the best security. Like that's why I have it. I have a lot of gold, a lot of silver physical, and it's nice to know. Like you got stacks of 500 rounds here and there. It's like you can at least get your milk and your fuel and barter for stuff for your generators, whatever. Right? Not that I think that's going to happen, but I mean it will happen eventually, even if it's just for a few days or weeks.
Yeah, I think you're preaching to the converted there, because most of our clients will probably agree with you. I know myself personally. Keeping something close to home is always just as a backup plan, something that you can have, which has value if banks collapse, if you can't get money out, if you can't use a credit card, debit card, you can't get cash. You need to have something. You need to have something that's secure, something that's real, and
Yeah,
something that you can keep in your hands.
for sure.
Yeah, let me
Mark,
jump in there,
we got a
guys.
few questions.
Yeah,
Sorry.
we have some great questions coming in on the chat. First, just wanted to say I've heard of people storing metal in a lot of different places. The glove box of their car is a first for me after nearly 20 years. So kudos to that guy. Came in handy to get his cup of or his gas that morning. Chris, you mentioned silver a couple times. One of the questions that came in from Peter in the chat is, where is silver in this cycle?
Sure. Yeah. The silver cycle is very similar to gold if we just kind of look back in time here. So we have a very similar play out where silver started a super cycle. It went dormant for a couple of years while the stock market rallied. Silver became, it took off with gold just before the financial crisis, and silver had a big pullback. Well, we've kind of done the same. We saw silver break in 2019 into a new super cycle. It's gone dormant. It's obviously much more volatile than gold, but it's gone dormant for a while, and now it's rocketing higher. And this chart pattern here is really, it's pretty much silver's hit resistance. It came right up to this level where we've seen multiple monthly highs and multi-month lows. So silver's kind of had its, both gold and silver have hit their targets. I don't know how much upside is really left at this point. I think if anything, they're probably going to flag and pull back and trade sideways or slightly lower and digest a little bit. They might have another push higher. But overall, I think the easy money, this trend and rally that we've seen in gold and silver up to this level was like kind of the easy kind of trend move that we identified a long time ago. So overall, I do believe we're going to see silver eventually pull back with the markets, consolidate, depending on how things unfold, will kind of dictate on how far silver goes. If there's like this crazy financial crisis and margin calls and everybody panics, even if people like silver, they still get margin calls or they just panic enough that people sell everything. Eventually they'll just hit a threshold where they're like, just liquidate everything, put me in cash. I don't trust anything. And that's what will pull commodities and metals down. It's not that they're bad investments. It's just people force liquidation and pure fear. So the big question will be, how much will it pull back? I mean, we could see silver back down at 24, 25, somewhere in this range. But I do believe when we get back like into the zone, eventually we're going to go into that, 80, $120 per ounce silver during the next major move higher. So it'll be a substantial move. The key is just understanding if we go through all these cycles, we're still probably like a year or so away from all of this unfolding and that new leg starting. So it's kind of more like, just consolidate, continue to hold and accumulate, and the trend here is a series of higher lows, a series of higher highs. It is pointing to higher pricing. The financial scenario couldn't be any better for precious metals. It's been very good for precious metals forever, it seems, but it just keeps getting better and better. The reasons to own it. So I have a very bullish outtake on it. If you look beyond, the next year and a half, I think we'll be skyrocketing higher.
That's good to know, Chris. Thank you. One more question from the chat, then Dave, I'll pass it back to you. The question is, are you able to talk about the impact of de-dollarization on precious metals now that Trump has won and threatened tariffs and sanctions? A tough one.
I don't know. I'm not sure how that'll play out, to be honest. It's outside my realm.
Fair enough. Fair enough. Thanks. And I'll pitch one more at you then while I have you here. Where was I? First question. Oh, this one I think you can comment on, Chris. Do you see a correlation between bonds and gold, both treasuries and corporate?
Um, they're not really. Bonds are kind of their own beast. I think, we're starting to see the stock market put in a major market top in the economy. And usually when something is cresting and putting in a major top, there's usually a new asset like rising from the ashes. I do believe we're going to see bonds want to move higher in terms of like TLT. I think we're going to see rates go down, which means bond prices will go up. So we're definitely seeing a bottoming formation in TLT, the long-term treasury bonds. I do think we're going to see them go higher in due time. So I do feel like they are going to be kind of a defensive play. I do think they could go higher while the stock market goes down, and I do think silver and gold could go down with the stock market as well, and bonds might be a bit of a safe haven play that hold value temporarily. But yeah, so they're very to me they're very different plays, and I think we're going to see potential upside here in the bond market.
Great.
Thanks, Chris.
Now, as we mentioned, some of these questions, a few of the questions are going to relate to the recent election. Obviously, big news, probably the biggest story in the world for the past recent history. This one comes in. Do you foresee the recent election results affecting short-term versus long-term investment strategies in precious metals?
Uh, not really. So like I follow price action, and for me, when I look at precious metals, I don't actively trade precious metals unless they're in like a really strong super cycle. So for example, let me just pull gold up here. If we take a look at the gold chart, um, I'll be very excited when gold, when the financial markets have a reset and gold has a reset. This is the phase that, everyone likes. If you've ever traded precious metals and gold miners in this phase, this is where you make like hundreds and sometimes thousands of percent return on some of the gold mining stocks. That is the phase I'm waiting for the next precious metal space. So I think we're going to see gold and silver pull back and have a correction. Once we get into this scenario, very similar to this, where there's going to be a reset, I will be short-term trading and getting back into that space. I'll be buying physical metal. I'll be buying gold stocks, like gold and silver miners and things like that. But when I look at gold from an investment standpoint, doesn't matter who gets in. I do believe precious metals are going to continue to keep going up. It's just the cost of everything naturally goes up. So I believe they're going to keep rising as well with the dollar, stuck with the dollar currency. But overall, the way I buy gold is I buy a bunch during consolidation or pullbacks, and I just slowly accumulate some every year. And I look at it as a long-term insurance policy. I don't buy gold to try and make huge gains to retire early. That's not what I do. I buy gold with a chunk of my portfolio, gold and silver, and I just know, hey, if the world falls apart, that small percentage of physical metal I have, if my home value crashes and the currency like evaporates, probably my precious metals will go up in value and counter the losses in fiat stuff, right? That's the way I see it. So to me, it's just that physical asset insurance plan. And so I don't actively get out of my precious metals. When I buy physical, I buy it and it never leaves. I just slowly keep accumulating it. And once we do have one of these cycles, this next cycle low in gold, I will be buying more physical metals and, waiting for that next run up and just rebalancing. So I have a certain percentage of my portfolio that's in metals and look at it that way. So very different strategies in terms of the short term is only a very small phase. A few years I trade it actively, and then from an investment standpoint, I load up when I'm feeling like I want to buy a bunch of bars and hold on to it forever.
So it's you view precious metals as a strategic wealth preservation, so to say.
For sure, yeah, it's peace of mind. It's crazy how much comfort it gives you. I mean, I'm preaching to the choir, but um, yeah, it is amazing. Once you have a certain amount of metals, you're like, well, I have enough metals here that if something bad happens, I can survive for a long time with paying in metals, right? So it's and having all the different denominations, big bars, small bars, rounds, all that stuff.
Thanks. Next question. With your asset revesting approach, what indicators are you currently prioritizing to assess risk in the precious metals market?
So with the asset revesting strategy, we actually don't, it's not part of our asset revesting strategy. So the asset revesting strategy focuses on equities, bonds, the US dollar, and in cash positions. So through four different assets. And so the asset revesting strategy is constantly either moving from equities to bonds or to a currency or to an interest bearing cash position. And that's how the asset revesting strategy works. So it's always in something going up. In terms of precious metals, it is a different strategy and really comes down to knowing when we start a new super cycle, that's when you want to accumulate because like, for example, if we're looking at this chart right now, we gold went into this big stage one base. It took forever. And then it started to break out and put in this bull flag pattern. This is when I would be like, people buying it down here and all through here saying, I'm picking the bottom. You are in a way, yes, you're picking the bottom, but you're wasting like 3, 4, 5, 6 years of no returns. Whereas through here, you could be making money elsewhere each of those years. And then as soon as gold starts to break out, you're like, okay, now I'm going to go buy another, 3,000 ounces of silver and a bunch of ounces of gold. And then boom, it takes off and it starts that leg up. And you can do the same over here. When it breaks out to the next leg, this is like, okay, now that the stock market has skyrocketed during this time and now the stock market's struggling a bit, I'm going to take that money. I'm going to move it into gold. I'm going to buy a bunch of gold because it's starting a new uptrend and I get instant gratification. So I invest for bars and gold when there is a new leg higher. I want to jump in. That's when I buy. And so I don't buy during so much of like a base or anything because that base could last for a decade. And I don't want just money to sit there. If I get in, I want it to grow right away. I don't know if that answers your question. I don't fully remember what your question was.
It's excellent there. Kind of a side note, I know some of our clients will they'll trade in and out of Bitcoin cycles. So they are gold bugs, believers in hard assets, but they also know that the crypto market can provide some fantastic returns. And so they will take cash, invest in a Bitcoin, try to time a top, take that back and buy physical gold with it. How do you view the crypto market, and is it something you think that investors could get good returns with?
Yeah, that's a good question. So it's kind of interesting because yesterday I bought Bitcoin for the first time in like 10 years, or I don't know when I bought it last. It was 5, 10 years ago, easy. 10 years ago. I don't know. I've bought it so long ago, I don't remember. But I like Bitcoin now. I'm not a huge Bitcoin fan, to be honest. I'm only really buying it because I haven't bought it forever, and I love the chart pattern. So this is the monthly chart of Bitcoin. And what is showing on this chart here using a tool called Fibonacci extensions. This is the most powerful, easiest way to predict where price should be moving based on Fibonacci theory. And all it's doing is it's taking the values here. If I was to just show you, it takes the rally, it takes the pullback, and based on that, it projects forward where that momentum should go. And I use two levels here without to get too technical. 618, so 61% of this move extended from this low, and then 100%. So whatever this percentage move was is the same from here. And this chart here is telling us we should see, Bitcoin move somewhere to like $110,000, $112,000 per Bitcoin. And as I just showed you guys, I like to buy into something when it's breaking out of a major pattern. And Bitcoin has broken out to a new high. It is pointing to an imminent rally of like 50% gain. And so that's where I put some money yesterday and anticipating this to move up. The general rule is if it hits the 618 and has a pause and hiccup for a little while, then you almost always go up and hit that 100% measured move. There's something about it. If it hits this level and pauses, it means the chart's been drawing properly, the momentum is accurate. And a really good way to view this is gold is phenomenal for this. If we look at the monthly chart of gold and I draw this level right here. So this was the low back when the previous super cycle started. We have the 2011 high, the 2015 low. If I carry this forward, this is the same thing. This is why I invested a lot back over here. And even Eric Sprott was talking about, I wrote an article back here saying this is the time to load up in metals. Like it's the next stop is 2750. And this is where I got really excited because we had this run up, we had the pullback, and based on that, it says 618 should be the level where there's going to be some big pause. There's going to be some type of pause and correction. And then from there, once it gets traction, it should go to the 100% measured move, which is where it hit in the last month. And so that is it's a 25 year, like, well, it's a 12 and a half year cycle has now completed itself. And I saw this coming years ago. This is what I love about Fibonacci. I love about this works with any commodity, works with any stock. Fibonacci is a powerful tool. And that's why I'm nervous about gold having, a pullback. People are saying it's going to go to like 5, 6,000, and it might, but based on analysis, gold has run out of steam, silver has run out of steam. They've hit resistance. They're still holding their uptrend, but um, this is where I see it going. And bringing you back to Bitcoin here, Bitcoin is doing one of these runs right here where we're going to see it have that move. If I can stretch this back out, we're starting this run to 618. It's going to have some type of pause for a few months or so, and then probably see it rocket up. So that's why I like Bitcoin. It has the big cup and handle pattern, like we talked about before. It's a very, very strong chart pattern. There's also a pattern here called a bull flag, which means you got a flagpole going up and the price flags sideways like it's blowing in the wind. That is known as the halfway point, which is why we take the rally from the low to the high. And here, and this projects the second half of that move. So when you see a bull flag like this, that's just the halfway point. So you've got that move, that opportunity again. And that's why I like Bitcoin. It is definitely difficult to flip, to try and make money in Bitcoin and then rotate back into another one. You definitely have to be very skilled. But you can totally do it if you understand. And I really like when it comes to gold, and silver and Bitcoin, for example. I like these monthly charts because I don't want to get sucked into the daily or the weekly noise. I just want to like every month look at it and be like, oh, we're still in a range probably for another few months, or we're breaking out right now in Bitcoin. We're like, okay, well, this has got potential for a 3 to 9 month rally. Like let's get on board. So the monthly charts are great because they get you into some really exciting trades with some big gains, big trends, right? It's not over in a week. It's like the train's leaving its station for the next voyage, which is pretty exciting.
Now, would the 618 also be like a resistance level? You expect it to bounce off?
Yeah, that's what it is. It's usually a first level of where the momentum runs out, and usually you see sellers step in. For some reason, Fibonacci is like in everything. It's in plants. It's amazing the different Fibonacci theory. And for some reason, at 618, things change directions. There's a pause. Energy just stalls out, and then from there, if it can break through it, it's off to the races again.
Chris, sticking with the Fibonacci ratios for a second, there's actually a question that came in from Mike. It's based on Fibonacci ratios. Where do you see intermediate term lows on gold in the next 12 months?
Intermediate lows. All right, let's take a peek here. So there's a few different ways we can find the lows of where gold may be, and this is instead of Fibonacci extension, which tells us where things should project forward. We're going to look at a Fibonacci retracement, which is where price could pull back to. So this is a very simple tool. We can look at it from two different levels. We can go from this major low down here and say, okay, well, if it rallied all the way up here, and we'll just carry this forward. These are the three levels that gold will find support from that chart pattern. And this here is the 38% retracement, meaning this pullback is 38% of this entire move up that it had. And so this would be a very healthy pullback. If it pulls back to here and then wants to go higher, that's a really good sign. Generally, assets fall in this box here between 50%. So it gives back half of that move, somewhere in this range, and then it'll stabilize, it'll carve out a bottom, and then eventually, work its way higher out of there. So that would be the range, which is about it's about 2000 to 2150, somewhere in that kind of range for gold. We can also look at another shorter term view, because I think you mentioned kind of the shorter term. If we look at this more recent rally, this will tell us where that window is. And let me just clean a couple of these lines up here. We can see the smaller box here where gold could pull back into, which is more or less 2200 to 2350 in that range. So we could see gold pull back somewhere in this range through here, before potentially wanting to go higher. Now, keep in mind, this is the monthly chart. So every one of these bars is 30 days. So if I'm dragging this out, that's like a year from now. Um, and that's very possible. I think it's going to take a year or so for the markets to reset. And typically gold and silver will bottom before the stock market does. They'll turn around first, which is a great leading indicator that the stock market is starting to bottom. Because once everybody has given up on stocks and real estate and everything else they got into, they're like, just put me in gold and silver. There's like this, they just, for some reason, they go from wanting to be in the coolest investments to like, just put me in metals. So like there's this switch that flips in people's mind. And so I think we're still like late next year at the earliest, but that is the range, like 20, 23, 50, potentially down to about 2000 would be like those two major ranges that you could fall into.
Thanks, Chris. That's a great answer.
All right.
So you've touched on some of these questions before, so if it gets a little repetitive, I do apologize. For investors wary of traditional buy and hold strategies, what alternatives would you suggest for consistent returns in a potentially volatile market?
Yeah, so like the asset investing strategy that I focus on, so I just trade ETFs. It's a strategy that I've been doing since 2001. It's the newsletter that I offer. So I share what I do is I manage my own money and I share the exact trades, my exact portfolio with subscribers. So all we do is we buy either the stock indexes, the SP 500 or NASDAQ. We buy TLT or the US dollar ETF, or we're in BIL, which is just a cash ETF that pays us a daily interest. And so when the markets get rough and when they fall, we'll get out of the equities market and we will move into either bonds or we'll move into the dollar. A lot of times during a bear market, the US dollar will rally very strong. And so we'll move into those. And sometimes there is no really good asset other than just cash. And sometimes cash is one of the best positions until chaos kind of stalls out and it provides a new opportunity. So that's how we go about dealing with the volatility. In fact, let me just see if I have, um, if I pull this up real quick, you might be able to see. Um, so this is kind of how the asset investing strategy works. So for example, we've got SPY and this is the COVID crash. So when our strategy says, hey, the market's rolled over, the money is flowing out of equities, we don't want to hold it anymore. We will exit the indexes and then we'll move into, for example, bonds were a buy back then. We moved into bonds. They rallied about 19% in 9 days. It gapped up above our 15% target and we got out. And then once that trade was over, we moved into BIL. And this is just a cash position. There's no downside. It just pays you daily interest, and then it'll pay out a monthly dividend as well. And so we sat in cash after making a bunch of money in TLT. Well, fear hit the markets. Everybody piled into bonds. We sat in cash while the world was trying to figure out what to do. And then we got back into the stock market. And so the key to a strategy that can make money in a falling market is to have something that can identify when a trend changes and that knows to go to a different asset class that should be going up. And if there isn't anything going up, then you literally just don't do anything. Sitting on your hands is sometimes the best play, which is a cash bill position. And if you do that, you end up with, like, for example, not that I really want to show this too much, but this upper line here is the asset investing strategy. And this is the 2008 financial crisis. This is the SP 500. This is the 60/40 buy and hold portfolio. They fell 40 to 50%. And this strategy that I offer, it's like all we're doing is we're consistently rotating from one asset to the next. And just as I showed you, when something starts a new uptrend, and how that's when we get into it, that's what we do with the asset investing strategy. So we get into something, it goes up, and when it actually starts to turn and go down, we exit it, and then we move into the next asset class that is starting to go up. So that's the way to do it. Now, eventually, through all of this, is when the stock market has a reset, and it's part of my strategy of what I do is I do cover gold every day and every week in the strategy. It's separate; it's not part of that strategy. But I offer everything that I do with gold. I say, this is the time to load up with gold. This is when I'm buying. And when the new gold bull market starts, hopefully late next year, that's when, I'll be talking about it with subscribers saying, listen, this is the time. It's like the last time to load up before it really takes off. So I cover gold all the time, even though it's not part of the ETF strategy. I say, where we are in the cycles and when I'm adding to my physical stacks, which is, I think, a really valuable thing because there's key times you want to pick up metals.
Perfect. The next question is going to tie in to what you said about sitting on cash at times. How might the outcome of the U.S. election influence the U.S. dollar strength, and what impact do you expect that will have on precious metals? We've seen something, a little out of the normal with U.S. dollar and gold both strengthening at the same time. But how do you see the U.S. dollar behaving over the near future?
Yeah, so we've seen, as you mentioned, Dave, a huge rally in the U.S. dollar. If I was to just stretch this forward, we've seen the U.S. dollar more or less up and to the right. If I click on gold chart, it is also up and to the right. Not too often do we see the dollar have that strong of a move, and gold keeps going with it. So this is definitely a big warning sign that something is not good in the financial system, and I think we're going to see some chaos there. If we take a look at the monthly chart of the dollar, and I like to always look back at the monthly chart because it really, if you understand the larger cycles at play, it takes a lot of guesswork and a lot of anxiety out of things because you know where things are more or less headed. So long story short, we have a series of higher lows, a series of higher highs. That's the definition of an uptrend. This is a bull flag pattern. It is pointing to, another big move in the US dollar to the upside. I think we could see this really continue to skyrocket into the mid 20s as the economy and the stock market crumbles. I think we're going to see the dollar do very well. I think, I mean, this is just obviously my opinion, but I think with Trump and Elon in there, and what they're trying to do with cutting costs and trying to make the government efficient because they're probably the worst efficient business in the world. I mean, that's might be why we're seeing the dollar move up. People are saying, hey, maybe America's going to get their stuff together and start to actually spend money smartly. But so I'm very bullish on the dollar, and the dollar typically goes up when there's chaos in other countries. People still fall back to the dollar as a reserve currency, and um, when we go into the chaos of the markets, the selling pressure will probably pull metals down a little bit, and the strong dollar will also apply downward pressure on metals, creating that opportunity to buy even more, when the time comes. So I'm bullish on the dollar. I actually keep a very large chunk of my main portfolio is in U.S. dollars. I'm in Canada because I believe we're going to continue to see the dollar strengthen, and I want to take advantage of the currency exchange as well. There will be a time when the dollar gets up here where you probably don't want to be holding US currency. You want to probably be holding like Canadian currency, will be my belief at that point, or holding Canadian currency or physical metals, obviously, and trading ETFs in Canadian dollars. So the positions, your investments are in ETFs. They can still be the SP 500 ETF, but it's in a Canadian currency. So as the US dollar plummets, you're not watching your currency devalue. You're actually in another currency going up in value. So there's a lot at play, definitely, with what's unfolding here.
No, I know a lot of our Canadian clients. Originally, I'm from Canada myself. The exchange rate's been painful, to say the least, lately. But it's good to see that there's strategies you can employ to take advantage when things start to swap.
Yeah.
Speaking of ratios, gold silver ratio is something a lot of our clients do pay attention to. Do you see any specific opportunities in the gold and silver ratio based on the current technical trends?
So I've never really been a big fan of the gold and silver ratio. I know a lot of people look at it and talk about it. Um, I really just follow price of each individual asset, and I just get into them when they're starting a new major trend. Obviously, there's merit to it. If there's times when you want to get heavier weighted in silver or gold, but overall, it's a pretty basic high level. You never know what metal is actually going to really perform the best. Generally, the thing you think is going to do the best doesn't. And I like everybody's been loading up on silver forever. And I almost have this feeling that, eventually something's going to happen that's going to spark gold to become like the shining star. Percentage wise, it's going to just skyrocket. I mean, it's tough to outperform silver because it can move, but I do think gold has got a lot of potential with currencies, potentially currency backed by gold, and it could get a lot of attention. So I've never traded based off of the ratio. Myself, it's I just focus on, the actual price of the underlying and whatever you're comfortable with. I mean, I still believe if you're investing in something, you still want to invest in something you're comfortable in, right? Like some people just naturally like silver more. If you're younger, maybe you want to be more speculative with it. Gold is kind of that slower, more consistent beast. So it really comes down to your personality and your balance weighting. I'm fairly even. I think I'm about 60% silver and 40% gold. It's fairly even, surprisingly.
Chris, I've got one, not to take a step back, but you were talking about the US dollar. So this question coming in from Peter does touch on it a little bit. I don't know if you can comment, but he said if the US economy goes into hyperinflation, do the cycles then speed up?
I'm not sure. I would think so. I think if anything goes into hyperdrive, it's going to be faster. Everything will move faster, right? So, um, yeah, I'm not 100% sure, but I would think if we go into some crazy move, it is definitely going to cause everything else to have wild moves. Everything is related. This is the big thing is like when one asset class is going down, something else is going up because money's coming out of it and that money is going somewhere else. When there's huge inflation somewhere, it is going to cause rates and everything to change, which naturally move bonds and naturally move metals. So yeah, if anything big in the economy has a big swing, it is going to swing all kinds of stuff in a faster way. It's just really hard to obviously predict what'll exactly happen, how fast it'll go, but it'll definitely increase in velocity.
Right. That makes perfect sense. And one more, question. This one came from Nadia. Speaking about the Canadian dollar, the US dollar, for us who have lived it for a long time, we might know the answer. But the question is, how will the Canadian dollar perform when the US dollar declines? And I guess, declines substantially. Would you expect the Canadian dollar to have a better exchange rate?
Yeah, I believe when the dollar starts to fall, I think what's going to happen is we're going to see commodities like rise from the ashes. I mean, overall, when you look at like the major cycles, commodities are still very, very undervalued compared to all like the equities markets. Um, they're super undervalued. Like so I do believe there will be a time where Canada, the Canadian dollar, because the Canadian dollar does move quite a bit with oil. It's very, very linked to the price of crude oil. And we're resource rich. So I think we're going to eventually see once the financial cycle unwinds, people with resources and metals, right? Like countries that have physical stuff are going to do very well. So I think the Canadian dollar will be strong. And that's what I just was talking about. When the US dollar tops out, I think over the next year or so, we're going to want to move your money into Canadian dollars. You're going to make a ton of money in the exchange holding US dollars, sell it all, buy Canadian dollars because it'll be super low value. And then the Canadian dollar, the loonie will start to rise and it'll be another very good play in terms of appreciation, I think. So, because we're going to be metals and oil rich.
Yeah, I mean, we've seen the Canadian dollar appreciate to par before. I mean, it sounds crazy saying it now that
Yeah.
the dollar's trading so low, the Canadian dollar, but we have seen it happen before. I do remember when it did happen
Yeah, it was
once.
like 2010, 2011, somewhere in
Yeah.
there. It went negative. Like, oh my gosh, I can't believe the dollar is worth less than the loonie.
Well, oil went to zero once too in my lifetime anyway. So we've seen some crazy things happen.
Yeah, yeah.
Dave, do you have any other questions? I've got one or two left here in the chat, but if you've got something for Chris, please go ahead.
Yeah, so we'll come back to your asset revesting method. How would that adjust for inflationary versus deflationary economic policies that may be coming up?
So yeah, it doesn't adjust. The strategy doesn't adjust. What the strategy does is it's trying to constantly pull money out of an asset class. And if we're focusing on always trying to pull money out, we're trying to outperform inflation and we're trying to outperform the buy and hold. And it really is a performance strategy, is what it is. It's like, how do we always just bet on the winning horse? And that's what that strategy does. So it really doesn't matter what inflation, what all that stuff is going on. It's really just saying, hey, who cares about the news? Who cares about inflation? Who cares what the rate is? Let's just focus on making money. Which asset is going up and starting a new bull market? Let's move into it and ride it. And when it comes to an end, let's find the next one. And so it really doesn't matter what is going on in the world and the economy because we're following price. And our number one goal is to hold something going up in value. And if we're not holding things falling and we're not holding things that are going sideways without value, we're going to outperform inflation and all of that stuff over the long run for sure.
Okay, so in terms of adjusting then out of one market, what are the key signals that you'd be looking for?
So we look for a lot of different stuff. So there's a lot of different layers. I call it like inner market analysis. So it's like a three-dimensional view of the markets. A lot of people will look at a price chart and throw indicators on it. Almost every indicator is based on price. So you're really just using the same data, just looking at it differently. The way I look at the market is I look at price action. I want to see if it's trending higher or a series of higher highs and higher lows, or if it's trending down from a short-term perspective and a longer-term, like monthly chart. I also then go to another dimension. I want to know where money is flowing. Is money flowing into risky stocks like the Russell 2000, ARK ETFs, like small caps, or is money flowing into like dividend or utilities or gold or consumer staples? So that's telling us like the sentiment of the investors. If they're nervous, they're going to go into utilities and boring companies because they want the dividends and they don't want to get into high flying risk companies. And if they're so we follow price, we follow sentiment, so we know what they're thinking and doing with their money. And then on top of that, we have cycle analysis that shows us where cycles should start and end more or less. And then all of those things combined will say, okay, we now are in favor. The tide is going up. We just had a cycle, a short-term cycle low. The trend has now just turned up on that shorter cycle. Money is flowing into all, for example, like right now, it's flowing into the stock market. Money is piling into every sector. And that is a broad market rally. And majority of money is going into small cap stocks, which is telling us people want to throw their money into the really fast moving growth stocks, which means they're super confident. And so that is telling us we want to be in the equities market and ride this trend higher. So we use price, more or less time and sentiment. Those three things give us a three-dimensional view of what the market is doing, what the market participants are thinking, and where they're putting their money. And then also everything kind of goes in cycles. There's waves, right? And there's a herd mentality. People all tend to do the same thing at the same time. And so we can gauge that with money flows and momentum and identify those waves that roll through the market every year.
Great. Mark, do you have any other questions there from the chat?
Yeah, I've let me just take a quick look. I know I've got one great question. Um, Chris, I'm going to throw this one at you. We did a YouTube, I've got two here. We did a YouTube video um, that was quite popular. It addressed owning coins versus bars. Now, you've talked about your own stockpile that you're holding on to. It's a long-term thing for you. You know, you're not going to be selling your physical metal anytime soon, but do you have a personal preference? Just want to throw that question at you.
Yeah. So I do have lots of small coins as I was pointing rounds before, but I happen to get this off a buddy. So my buddy just moved to the States and he's like, I don't want to take this across. I have to claim it. I don't want to ship it. So I'm like, I'll buy it off you. So I bought this 1,000 ounce bar of silver. So I'm like, I'll take it off your hands. So I'm a huge fan. I'm a huge fan. So my view is very different than a lot, I think. I have a relative who collects coins, does collectibles, really rare stuff. And my whole mentality is like, give me volume. I just want to, I don't need a brand name. I just need a volume of metal. So give me the most metal for the best price. Because I think if all hell was to break loose and the world is a tough place and you've got like some basic cheap, like a normal round, a standard round versus some crazy collectible coin, if you're backed into a corner, guy's going to only probably give you this 1 ounce round value. He's like, I don't care if it's got an eagle on it. Just I'm paying you for one silver, and you paid like a huge premium. So my whole philosophy is, if I ever have to use these, I only buy these for insurance for if the world falls apart. So if the world falls apart, I want 1 ounce and I just want to pay for 1 ounce. I don't want to pay for art or rareness. That's my view. So I'm like, how do I buy maximum ounces? And I have lots of cases of, like, 500-piece rounds. So if I needed to dish them out, but then I just really go to bigger bars, lots of 100-ounce bars and a few 1,000-ounce bars. Yeah.
Well, thanks for picking up that 1,000 ounce bar. Those are pretty heavy. Those weigh
They
about
are,
70
yeah.
pounds. So good on you to
Yeah.
do that in stride mid answer. One last question here, guys. We're going to be wrapping up soon. If you do have anything you want to ask Chris, now's the time to pop it in the chat. So we'll let folks do that. But Chris, I have a great question for you. I mean, this is a gold and silver crowd after all, and yeah, I have to ask this question. It's not technical in nature, but it does tie into investing. So the question is, does it make sense to buy gold and silver not for making money, but to hold on for future retirement purposes? So I get more of a wealth preservation strategy.
100%. That's why I buy it. I'm not buying it to make a ton of money. I'd love it to skyrocket someday, but the reality is, if gold goes to like 25,000 and silver's at like 200, I mean, what kind of world are we in? Like, do we actually want that? It means we're probably in some crazy tough times. So I buy it for peace of mind. I know that if anything happens, I can drive to Toronto, go to the safes, I can pick up gold and silver. So I buy it because well, first of all, it's highly addicting. Once you start buying it, like, I have to keep it around me. It feels good. It's nice to have, but it is an insurance plan. There's something about just like knowing you've got physical metal. And the perfect example was when the internet went down and the guy said he bought silver rounds. I know the gas station he went to because I used to live around the corner from it. And it was amazing. It's not to me, gold's not about making a ton of money. Gold, it's about peace of mind. It's about retiring and just having that comfort that, hey, I have an asset that is like outside of the financial system that I just have. It's just nice to have. It's like having a brand new car. You're like, the odds of it breaking down are pretty slim. Like, there's just peace of mind of a fresh car versus buying an old lemon for a discount, right? That's like, there's, precious metal is, I mean, just something I think everybody should have for peace of mind. And then if you want to get aggressive with it, you can buy as much as you want, knock yourself out. There's nothing wrong with that. I think it's going to go up in value long term, no matter what. It's just a matter of how aggressive you want to be. If for a growth strategy, it doesn't pay dividends or anything like that, but we're going to be going into another big growth spurt. We just had one. There's going to be a pause, which is good, and then we'll go into another one, which I think is going to be huge. I think we're going to see, like, this next run in precious metals is going to be like life game changing for gold miners, game changing for anybody who holds a bunch of it. It's kind of that last opportunity. After this, it'll feel like gold and silver are really expensive.
Thanks, Chris. Appreciate the insights there. Perfect answer. Probably the perfect way to start wrapping up this evening. Dave, anything from your side?
Just for myself, for SWP and our clients, just want to thank you, Chris, for coming out tonight. I learned a lot. I hope our clients did as well. I found it really helpful and useful to have you here. Some fantastic charts. Just once again, thank you for taking the time.
Yeah, and my pleasure. It's always great to kind of try and share some insight, because this can save people a lot of money, a lot of stress. At least if you know what stuff's doing, right? It takes the stress out. Knowing there's going to be a pullback, it makes I get excited for this, knowing there's going to be a correction and pullback, because I'm just like everybody else. I want to buy more gold and silver, and a pullback is actually very healthy, a pause here. So this is the opportunity to take advantage of. So.
Yeah, I just want to echo Dave's thoughts, Chris. Thank you very, very much for joining us. It's a real pleasure. You're so enthusiastic, obviously, such a wealth of knowledge. I do recommend your book, Asset Revesting. We talked quite a bit about it this evening. It is a great book. It's an easy read too. I mean, I think I read it over a weekend, and by Monday I was implementing, my own version of what you had taught me in the book. So, highly recommended. I had put it in the chat for people to see the name there.
Perfect. Yeah.
Thanks to everyone who joined us this evening. We know that you spent 90 minutes of your personal time with us. We really appreciate that. We will be doing more of these online webinars in the coming months, probably 3 months from now. So just past the Christmas break, we'll bring another great guest your way. So thank you, everybody. And thanks again, Chris, for your time this evening.
All right. Thanks, guys. Take care. Appreciate everybody's questions.
All right. Take care, everybody. Bye-bye.